Alrighty. And so, look, I mean, this is how things change. I ended up doing nothing yesterday. All that bullshit from yesterday ended up doing nothing. I scalped some Russell a little bit. Actually did take one of these trades. Didn't make much, made a few bucks, not a lot. But none of these trades worked out. And the reason why none of the earnings trades had any juice at all, there was no volatility in any of them. Nothing. There was nothing there. CLF, when we looked at it yesterday, it had an IV rank mid-20s. It was like 24, 25. Ended up being like 18. It's 19 and a half. It's down a little bit. If you did do the trade, you're probably in pretty good spot. I did not. IV rank was just too low, and I just decided to do a hard pass. It's if you did any of the trades, though, you're going to be sitting in a pretty good spot, especially if you did the covered call. The covered call was probably the best of all of them because it really didn't move that much. It's trading at 15.77. So that call would be in the money. Here it is right here. Where is CLF? Right, your call would now be would be out of the money. Your 16 call is now clearly pretty decently out of the money. Your cost basis is 14.60, and you're sitting perfect, and it's doing exactly what you wanted it to do. UPS, same thing. I went and looked at UPS. I was like, what is going on here? IV rank, and it's below 20. It was below 20. And so, like, again, another one that was just like a hard pass. I mean, it was bad enough as it was. General Motors, same thing. Spotify, big disappointment. I was trying to do this one before the close. I couldn't do anything. I wouldn't get filled. There was no volume yesterday either. It sucked. So what I ended up doing yesterday is the only thing that really looked remotely interesting, if it was at all, was Target. Target kind of got a little bit of a pop yesterday because Bed Bath and the Greater Beyond, and Bed Bath is going to the Great Beyond. I decided to short some Target. And the way I shorted Target was I just did a real simple call spread. I sold a 160. I went in a little bit in the money because I wanted to get synthetically short. I sold a 160, 170 call spread for about $400. It was about $400. I used about 500. It was max loss. It was I used about $500 buying power, and that's really all. And I felt it necessary to sell here in Target because, as you can see, the IV rank up here is 42.4. And so with the IV rank that high, go here. With the IV rank that high, it's definitely worth selling some premium in here because as volatility goes right now, that's pretty damn good. There's not really a hell of a lot out there. You could see my list is pretty short so far on like what I've been trading. And honestly, this is the list that I have had so far as like what I've been doing. I haven't done a lot outside of any of these stocks. And to me, I'm the type of person that I will keep trading stuff if it continues to work. If it works, I keep trading it and I don't deviate it. And this is my list. That's not to say that these are the only things I'm going to trade, but right now this is all that's been kind of working. So anyway, that's kind of it. And then let's roll into earnings. And so, long story short, if you did any of the earnings trades, you're probably not in bad shape right now. I believe McDonald's already released. That had no IV rank, right? We did a hard pass on that. Looks like McDonald's is gapping up. It's up about $2. McDonald's is McDonald's is. It is what it is, right? It's McDonald's. It's not going anywhere. It's kind of recession proof, everything proof. I didn't look at General Motors. Let's take a look at General Motors. It's only because I'm watching Bloomberg, the pompous Bloomberg, jerk-offs on Bloomberg, douchebag who wears the bow tie. Like, dude, lose the bow tie already, right? Come on. They got the General Motors, somebody on there, somebody from General Motors, some corporate pedophile. So anyway, needless to say, General Motors, I don't know where that's at. Where's that at? It's up a little bit. It's up about $1. It's actually more than a little bit. It's up $1. So earnings per share were 221 versus 172. So, everything's great. Everything's great. All right, so let's look at some earnings for tonight, because tonight's got some good ones. I don't know if they're going to be good ones to trade, but as far as like the names of some of these, we got some big ones. Microsoft, Alphabet, and Visa. We'll take a look at those three, because those are kind of the big ones. So let's take a look at I'm gathering Microsoft's not going to have much juice in it. No, there's really not a lot of juice in here. Sneeze coming on. So not a lot of juice in here in Microsoft. IV rank 23.8. Let's pop over to the other screen. It's really not even worth looking at the chart. What are you looking at the chart for? They all look the same. They all look like garbage right now. Everything looks like a crap. Everything looks like crap. Let's face it. It all looks like a fucking garbage. Garbage. It's all garbage. Let's move this over so you can see my screen. Microsoft. All right, so Microsoft. 23.8. It's actually pretty bad. Let's go up to here. Let's actually get a new one. Let's go get a new one. Let's start over. All right, Microsoft template. Come on, template. We want the dock screen. There we go. Apply. So I highly recommend this app. Good app. So Microsoft, we have an IV rank of 23.8, really low. I mean, it is what it is. Expected move. Let's see. We're not going to be doing May. We'll take a look at May. Not even showing an expected move in May. But June, expected move is 20, 50, plus or minus. I'm going to look right at June. I don't know. Maybe let's look at May. Let's see. It looks like they are adding a ton of strikes today, probably because of earnings. So there's $2.50 wide strikes, which is kind of good, I guess. One standard deviation strangle. And I'm going to tell you right out of the gate, the margins in here are going to suck. They are going to suck. So the expected move, or literally actually not even the expected move, but the outside of the one standard deviation, we'll call it. So the one standard deviation strangle, okay, the one standard deviation strangle is the 255, 305. Buying power is $3,300. That's stiff. I know that's not really in a lot of wheelhouses for a lot of folks. But statistically, this trade is actually very statistically solid. And this is May, right? So you have good theta number in here at 18. You're going to do this for about $3.15. It looks like it's probably going to come in about that. Microsoft's trading at $2.80 right now. It's down about $1. I got a probability of profit of 78%, 79%, excuse me, and basically a delta neutral trade, 1.61. So the only thing bad about this trade is that buying power, but as far as all the other statistics, they are relatively good. And so I would mark that up as this is actually a pretty good trade. Again, if you have the capital, and that's going to be the big if you have. If you have the capital, you could do this trade. So I'm going to mock it up. Just be, so it's going to be in June. Or no, it's going to be May. It's going to be in May. May. It is a strangle. And then just to let you know, a strangle is an uncovered trade. You have the potential to lose all, right? Because Microsoft can go up to $1,000 and blah, 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 blah. So anyway, there it is. There's a disclosure on what a strangle is. And so basically the strangle is very easy, as we all know, is we are going to sell the 255 put and sell the 305 call. And you're going to do that for $3.15, which is $315. Big asterisk here for this. I just have to put it here. Buying power is a 33.15, we'll call it, just to be round numbers. Buying power is probably the biggest issue with this one. A good pop here of 79%. Good theta number of 18. Now, it would be a lot lower if there was a little less time, but seeing that we're about 24 days out, that theta number is not going to be through the roof. And, obviously max loss is infinity and beyond. But there is the trade, right? So it is a strangle. Now let's take it one step further and just let's look at it from a perspective. I don't have $3,300. Not everybody does. Let's look at it if we turn it into an iron condor. But what I'd like to do in this case, as opposed to just doing a standard iron condor, I'd rather do a little wider iron condor. So instead of doing it 5 wide, I'd prefer to do it 10. And the reason I'm doing it 10 is because it's asking me to log in again. And there's that freaking cron job. Not a con job, but the cron job. And the reason I'm doing it 10 is I'm trying to reduce my buying power, but I'm also looking to maximize my premium and also maintain a good probability of profit. So now you can see that buying power is now at 800. So we literally slashed the shit out of that. And if you could do this one for 170, although not optimum, right? We optimally like to bring in at least 1/3 of the buying power. In this market, you're just not going to find those. They're far and few between. And if you're going to find something where you're going to sell premium and bring in 1/3 of buying power, chances are it's going to be one of these shitbag stocks that I probably don't really even want to deal with. So this is what I would prefer to do as an iron condor. I know it's a little thick at 830. But this one is, again, this one's not a bad trade either. And this is what this one look like on the curve. And the nice thing about this trade as well is that a lot of the statistics look very similar to the strangle. And the reason is because it's $10 wide on either side and not 5. If we did 5, we're probably not even going to bring in a buck on this. And that's why I prefer to do the $10 wide one. And so this one you could do in an IRA, or this is a fully covered trade, right? There is no risk. Your max loss or your risk is actually clearly defined. So, and there it is. And so this one's got 76% probability of profit. Pretty delta neutral, but although it's a little skewed delta negative. A decent theta number there for an iron condor, right? I mean, if you're getting up in sixes and sevens on a iron condor, that's a pretty good theta. Generally, an iron condor is only going to run you about 2 or 3 thetas at most in the best situation. And so, again, a pretty good theta number there. You're going to bring in 170. Max loss is 830. And so all this is the alternative to the strangle in Microsoft. Like both of these trades, all right? And then again, if you're looking over here on the sides, all we did is we took this strangle and we covered the wings, right? We bought an option here and we bought an option here. That's all we did. All right? Try not to make it more complicated than it is, because that's all these trades, all these trades are. And I get these questions all the time. Mainly, all these trades are vertical spreads, not how you slice it. I mean, they're mostly vertical spreads. And whether or not again, strangle isn't a vertical spread, but it's a derivation of a vertical spread. It's basically an iron condor without the wings. They all pretty much can be constructed from a spread of some kind. So there you have it. So there's Microsoft. I don't want to talk about that one too much more than that. And who else do we got? So there's Microsoft. We also have Alphabet, which is Goog. Goog. Do you do Goog? Do you Google? I don't know. I usually use Goog. I usually don't trade Google. You don't really. Again, I know there's Class C, Class B. I don't hold on to it. I'm not voting. Somebody asked me like, oh, well, there's a difference because I want to. I'm like, I'm not voting on the fucking proxies. I don't give a shit about Class B, Class A. I don't give a shit. I'm just trading it, so I don't give a shit about it, right? As long as the options are liquid, I don't care. I don't give a damn. I don't care. All right, so here's Google. This actually has a pretty good IV rank, and we're going to do Goog, which is Class C. Yeah, no, it's a Class C. All right, whatever. Who cares? Doesn't matter. The options are just as liquid across the board. IV rank, pretty decent in these markets, 31.7. Expected move in May is $7. Expected move in June is $8. I always like to use the month ahead. Just gives you a little bit more room. 879. So pretty tight. Pretty tight. And I'm going to look in May first, only because if it does have a little bit higher volatility right now in the 30s, that you might get paid a little better. And I'm noticing that they have added a bunch of strikes here. And the reason I know that is, and the reason I know this is because I see there's no open interest on literally any of these strikes, which means they've been added. And most likely they were added because of earnings. Because there's always usually open interest on Goog. Let's look at Google then. Let's maybe change it to Google. Maybe that asshole is telling me to use Google is right. Let's just take a look at that open interest. No, it's actually worse. I mean, there's actually good open interest here, but it's the same. Let's stick with Goog. All right, so in Goog in May. Now, I don't like to get into things that don't have any open interest. You know that if you follow me long enough. If something doesn't have any open interest at all, chances are I'm not going to touch it. So I don't want to be the only one holding the bag. And then if I'm looking at open interest here, it's light. And these strikes were added recently, so that's probably why they're light. And so if I'm going to be doing anything in here, I'm either going to do the 95 or the 100. And that's because there's open interest there. There's liquidity. Not to saying the other strikes will be illiquid. They most likely won't. Google's a pretty widely traded stock, so I don't think I'd have a liquidity issue. in some of these strikes with the lighter open interest. But, just for demonstration purposes, I'm going to go and look at the 1 standard deviation strangle just to get an idea of where the margins are, what I would be looking at if I'm doing a high probability trade, right? So that's the most high probability trade there is the 1 standard deviation strangle. And so for a 1 standard deviation strangle in the Goog, we're looking at about $1.50 to use $1,000 worth of buying power. Now, in most markets, I'm going to say that sucks. But given this market and where volatility is, that's actually not too bad. I mean, so you have to kind of take what you're given. And so, I mean, on the surface, that's kind of, I'm going to just say that's probably a fair to mid-road trade. Decent theta at 8. You're in May, 77 probability profit. Bring in 150, right? We know strangle is, you can use, right? We know that story. Max loss has been unlimited. So with that being said, I don't know if I'd really be too excited about this trade just because I don't feel like I'm bringing in enough juice. And with that and not bringing in enough juice, I'm going to have to make some alterations to this. And my alteration would be to move my 96 up to a 100. And the reason I'm moving it up to a 100 is A, good open interest there, right? Big round number, that BRN, markets like big round numbers, $100. You would think that hopefully that they hold Google over 100. I don't know if it's going to hold 100 or not. I would think if we went and looked at the chart, there's probably some marking or something of some sort that's going to say that, yeah, there's probably some support at $100. Just because it's a big round number, somebody will say it. I mean, I'm not even going to look because it really doesn't matter. But anyway, I would go with the 100, 115. And I know it's kind of inside, literally just inside, just outside the expected move and inside the 1 standard deviation. But you could see that I literally doubled my premium. Also, my buying power actually went up quite a bit too. So it's just, again, I'm trying here to find a happy medium. And then with this move all the way up here to 100, you notice my delta has hardly changed. It's still almost delta neutral, which is kind of crazy. You would expect that I'm inside the expected move and I'm literally just on the outside of the expected move. On the call side, that I would be still skewed pretty heavily delta positive, not the case at all, which tells me that there is a decent amount of put skew here. I mean, here's the 22 delta option trading at 110. We always look at the bid trading at 110, and here's the 24 delta trading at 143, a pretty decent, not that much, 2 deltas away, and you're getting a lot more money. So there's definitely some put skew in here, which again could translate into that most people are short. The only problem I have with this trade, though, is that I don't want to use $1,400. I just don't. I really, really don't. I don't know how to do it. But in this case, what I'd like to do is I'm going to turn this into an iron condor, and I think an iron condor here is going to be a pretty good play. And there it is. And there's the iron condor, and I actually like this trade in the Googs for earnings. And this is where I'm going to go on this. And this is what this one looks like on the Kev, right? So it's going to be in May. Again, we're going in May and not in June. And the reason we're going in May is a little more volatility, a little more juice in May, get a little better theta number. It's going to be an iron condor, fully covered risk-defined trade, so you don't have to worry about, your ancestors and your friends and say, oh my God, you're short options. I heard somebody, guy who changed oil said, shut the fuck up, right? No, you didn't. Shut up, go away, and then, go buy your 10 shares of fucking Tesla while it's still fucking crashing. All right. So anyway, so here you go. And then this is going to be pretty easy construct. It's a buy, sell, and a buy with an iron condor, right? We're going to buy a 95 and sell a 100. And these are puts, right? So there's the first leg. And then the second leg is going to sell a 115 and buy a 120 call. Really straightforward. You do it all as one trade. Right? Here's one leg. We just put the dotted line here. There's your call spread. There's your call spread. There's your put spread. Do it all together. We do the hokey pokey and we call it an iron condor. All right. And then you're going to do this for $150 credit. Good buying power on this one. You only use $350. Probability of profit, 61%. It's not great, but it's better than 50, right? And it's better than 59. So 61% probability. Delta neutral, right? 0.44. So you're basically delta neutral on this trade. And then the theta, actually pretty good for an iron condor at you can call it 390. All right. And so there's that trade. And so there's a good one for the Googs. And that is Goog, not Google. All right. So there you go. There you have it. So a pretty straightforward one to me. And then you're going to need to probably start doing this one about 3 o'clock. I would give yourself a little time because you're going to have to work this one. Right now, mid price is at 150. This is going to change as the trading day goes. So by 3:30, this may actually be skewed a little bit, depending on which way Google goes. If Google kind of comes down a little bit or it goes up, you may have to move some strikes. I don't think you probably shouldn't have to, but if you do, you do. But it is going to be a little harder to put this one on because you have a four-legged monster here. So it's not like you're going to just throw it out at mid-price and then someone's going to come and buy it from you because, right, as a seller, if you're selling it, someone needs to buy it on the other side. So you are going to got to give yourself a little bit of time with this one to work it. What I mean by working it, you're going to put it in at a little higher price than you would think it's going to get, and then you're going to work it down, keep resubmitting it, work it, try and work the market. Sometimes it takes, you got to take a little finesse sometimes doing these trades. They just don't execute right away like the people in La La Land like to show you. That, we bought these puts, because, they were quoted when I said it, they were quoted at this. And, I didn't really get it at that, but I quoted it when it was there, and now it's this. And it's like, shut the fuck up. Shut up. Shut up, you freaking swindler. All right, that's really all I can see for tonight. Tomorrow morning, I don't really see anything. We'll look at Boeing. I don't think Boeing has any real juice in it, but we'll look at it anyway. There's Hess, Humana. That one usually sucks. Thermo Fisher. That one usually sucks for earnings too. And then really there'll be more plays tomorrow night because we got Meta, Roku, because it's in every TV. Roku, Service Now, Teledoc might not be bad. So we had a few for tomorrow night. And so for tomorrow morning, really, it's just Boeing. This one usually kind of sucks. This is going to be a hard pass. I mean, look at the volatility in this one. This is a hard pass, totally hard pass. In the Boeing is bad. 2.9. I mean, you can't do nothing in here. There's nothing you can do. No volatility. Big old that piece of crap. All right, so there we have earnings. That's it. So just two. Microsoft with Bill Gates is a fucking scientist now. We know that, right? Bill Gates is now a scientist because apparently when you get to have $1 billion, you could say you're anything you want. You know, you don't need to be qualified or anything. You just, if you have that kind of money, you could just say, I'm a fucking, I'm a biologist now. So anyway, there's Google as well. So Microsoft's the Strangle or the Iron Condor. We did both. Either one, depending on the capital needs. Strangle, Iron Condor. Iron Condor is going to be a wider one, with $10 wide. And then we have a Googs, which we're going to do an Iron Condor in there. And that's just a traditional one. And both in May, right? We didn't do June. We're doing May. And then that is the size of that. So now let's look at the major markets. Nothing's really on the table today. We did take out some space yesterday, and we did bounce off some pivots that were just like clockwork yesterday. They were so strong. And then this morning, we did get a pretty good slice through S3 here on the Russell at a bounce. I mean, chances are if I even took this trade, be perfectly honest with everybody, you would have gotten, at least I would have gotten stopped out because I don't use very wide stops. I use pretty tight stops. So I know I would have gotten stopped out on this one based on this. And then nothing to the upside. And you can see we really haven't, our ranges really haven't moved. I'm just going to modify my alert here and move this to S or R2 up here. And then this one to R3. We didn't take out anything to the upside at all. Right. So that's where we sit on the Russell. All right, I'm going to get rid of this because that's just in the way now. And that is where we sit. And I don't see S2 or S1 even being a good spot for possibly, maybe S1, where we at 1790, depending on what's going on. I may take that trade today at 1790 on the Russell. And it's really nothing like, hey, look, it looks like it would be more just a pivot point play. There's nothing really telling me here that that's of anything of any significance other than, if you look, we have been stuck. I mean, we're going back here almost to the 13th of March. We have gone nowhere. No place. Nowhere. Right? Stuck in this just slop house. Just chopping and a slopping. All right, so don't see anything there. That's about it on the Russell. Russell is a little more, I would say, a little more stagnant, and I think it's because the Russell is pretty heavily weighted in financials. It has a lot of regional banks, and they're the ones that kind of got whacked through all this last drawdown. So I think that's the reason why that's showing a little more capitulation, right? Whatever I always like to throw that word out there. Just means market's flat, folks. Just don't get caught up in the rhetoric, because it is all rhetoric. And then looking at some of the other indexes, I just don't see much of anything really cooking at all. And if I was if I was really going to make a play, I'm looking at NASDAQ here. NASDAQ to me looks like a screaming short at R3. I don't know if we even get there. That's a stretch. That's a pretty big move. And chances are we probably don't even get an attempt to get up to that level until after the Fed minutes and all that other stuff, because that would be something that would give it at least a catalyst to be able to get back up to that spot. And then looking at soybeans, nothing there. I mean, we're still kind of in a drawdown phase here in soybeans. And I'm still sitting on my hands. I am looking for an entry in soybeans. My spot that I like is down here at about 14.05. That's on the May contract. We are going to be flipping to, well, what'll happen is we'll flip to July, and then most traders will start trading November. So you'll start seeing July being traded just to be traded, but then you'll start to see most of the volume start to go out to November after May is done. And so this is going to roll soon. But this is the spot that I like in soybeans, is about 14.05. That's kind of my spot that I'm looking for. As far as the other grains are concerned, they're all kind of suck right now. Corn looks like it needs to pull back to about 635 down here at about S3 as well. And then that's it, right? And then I really haven't been following crude oil much. To me, it's been since we kind of peaked out at about 83 and change, it's been kind of a chop house down, and they've been really kind of doing a job on anybody trying to get long crude oil in here. It seems to be just like a, Dewey Whack-em and Howe, like whack-a-mole. Anytime anybody really seems to get or want to get long crude here, they seem to be smashing their face in the mud. And so I'm kind of staying clear. I do like crude at 75, right? I do like it down here. And if it fills this gap, and I'm not one of these gap players either, but, just happens to be that the gap on crude oil is at S3. And so I do like crude down there for a possible entry. But until then, I'm not going to touch it. Too volatile, too much movement. And then bonds, in my opinion, are getting to a point where I think bonds you're going to be able to short. You see, I got this big red line here. And I love big red lines because I drew it. And because I drew it, but I'm looking for this area. I'm looking for us to get up over this. And I think that would be the trigger for me to start maybe just leaning in a little bit short on bonds. Not that I think but at that point, there's going to be a point where people who are accumulating bonds down here in the high 20s, low 30s, you think up to 135 plus, they're going to start bailing out, right? So anyway, that's it. That's all I really got. So a couple earnings trades. Nothing for really tomorrow morning that I see. No. And then everything tomorrow night, on Wednesday night, will actually, there's a couple there. So have a good one. I think I got it in under 38 minutes. Not bad. And again, I will be back tomorrow. And have a good one.